Hey, what's up, everybody? Welcome back to the process. If you're seeing this video, that means met the goal of being able to explain how I look at, monitor, and invest in stocks in under 15 minutes. This should be a good informational video to let you know what to look at. I know everybody looks out there and they say, oh, I don't want to invest in the stock market because the stock market is gambling, the stock market is confusing, the stock market is just too much stuff going on, there's too many numbers, it's too fast of movement. It's a lot of different nuances and aspects out there that make the stock market look overbearing to people that don't know what's going on. And it's done intentionally because they want you to give your money to a stockbroker or a CPA to manage your money. So that means the money that they invest for you, they get a percentage of the money that you're investing. I know quite a few people in the stockbroker arena, the portfolio management arena, and most of those people don't invest in stocks themselves. Their retirement fund is strictly based off the fact that they can convince enough people to invest in the stock market for them so they can get a percentage of the money that you put in or percentage of the investment that you put in, either by i.e. churning your stocks or paying a management fee. When you talk to stockbrokers, they talk about how big the portfolio that they manage is because they get a percentage of the portfolio. In the truth, most hedge funds, most portfolio managers, most stockbrokers cannot even beat the market. It's just facts. I'm not saying nothing that's not historically proven. If you don't know what I'm talking about, go look up the Warren Buffett challenge to the hedge funds managers, the best of the best. They did a 10-year bet. Warren Buffett would only invest in the stock market himself or the S&P 500, and the hedge fund managers would put their money in an assortment of funds with other hedge funds. It's supposed to have been a 10-year challenge, and then the loser of the bet supposed to pay the winner of the bet $10 million to their prospective charity. In the end, it only took 3 years for everybody to realize that Warren Buffett just invested in the stock market, outperformed the hedge funds, and the hedge funds had no chance to recover. Warren Buffett won a 10-year bet in 3 years. So that just lets you know the nuance and the ability of these so-called managers, brokers, or whatever you have out there. So with this video, I'm going to show you how to invest in individual stocks, or what I do to invest in individual stocks. Of course, this is not financial advice. This is just giving you an insight on what I do. With all that said, let's get into the process. One thing before we get started, please like, subscribe, share. I know these videos are just something that come across your screen, but for us, we have to put in a lot of hours to produce these videos. So can you do something for me that costs you nothing? Please hit that like, subscribe, share with your friends, and help me out. All right, I got about 12-14 minutes to give you this information. And it's a couple call outs that I want to have before we even get into this. The first call out, me personally, 50% of my portfolio is in the market. It's in a combination of SPY, QQQ, usually 50-50 each one. Then 25% of my portfolio is in value investing, which I'm going to show you today. And the other 25% is, the home run hitters, the ones that's, people talking about the cryptos and all that other stuff. That's where it's at. But cryptocurrency, FYI, is less than 2% of my total net worth, all in all. I'm just giving you an insight on what I do as a contrarian investor. Another call out that I need to point out there is, if you're not willing to do the work on individual stocks, don't invest in individual stocks. You will be perfectly fine just investing in the market itself. If you find a VOO, a SPY, or a mutual fund that's indexed to the S&P 500, then you'll be fine. With all that being said, let's get into it. The first thing that I do is I look at different sectors. I always tell people when they first start investing, look at what's around your house, turn the label to the rear, look at the back of the label, and see what company owns it. That's the first, hallmark of where you should start looking to invest. I'm not saying invest there, but where you start looking to invest. For me, I look at different sectors, different industries. So, you got the housing market, you got the automobile market, you got the tech as far as chips, then you got the tech as far as PC, different avenues and things like that. But today, I'm just going to look at the automotive sector. That's a big sector that they're talked about a lot, especially with tariffs going on. So that's the sector I'm just going to look in and just do a quick breakdown and show you what is going through in my head when I'm trying to look at something to invest in. With the tariffs, we have different U.S. companies, you got Tesla, GM, Ford is the major companies. You got Stellantis, I believe that's the name. They used to be formerly Chrysler. That's a foreign owned, but it's still a major part of the U.S. brand as far as production. You have just percentage of companies that do some of their production in the United States or in the other countries. Of course, there's other automobile companies out there. It's the Nissan, it's the Jaguar, it's the Toyota. But I try to stay focused to home because the general accounting principles are relatively the same in the United States. So I don't try to venture off to companies outside the United States. So with that, we just stick with Stellantis, GM, Tesla, Ford. With the tariffs going on, my question is, which companies are least affected by the tariffs? It's a simple Google search to find that out. GM is somewhere over 30% of their production comes from out of the country. Stellantis is about 28%. Ford is about 18%. I'll put the numbers up there. So I'm just spitballing off the top of my head. Tesla, I think it's only like 5% or 8% of their production comes out of the United States to come to the United States to fully assemble the vehicle. So after I did that critical thinking exercise, then I narrowed it down to two companies, Ford and Tesla. Now it's just time for me to dig deeper into those two companies to see which one would make a better investment over the long term, not the short term, over the long term that will be beneficial for the things that I'm looking for. So with that, I'm going to pull up this handy dandy spreadsheet and just show you the things that I'm looking for in these two companies. Here's Ford, here's Tesla. The first thing I'm looking at first is if any company is giving me an income, a dividend. Can I get paid while I'm holding the stock? Tesla right now pays zero dividend. Ford right now pays a 60 cents dividend. That's 4 checks a year. It totals 60 cents per share. So the amount of shares you own times that by 60 cents a year, that's where it comes at. And as far as yield is the thing that we care about. 0% on Tesla, 6.13% on Ford. So it's about 2% higher than a high yield savings account. We just keep on moving down the line and just weighing the pros and cons of each one. I go to the next one. Units sold per year. So how many vehicles sold per year? Tesla sold 1.789 million vehicles. Ford sold 208 million. Tesla's margin is way better than Ford's, 17.66 compared to Ford's 8.38. Now, Tesla got some other things in there like Tesla Solar. So I couldn't get a clear recollection of what just automobile sales was. But then we go to net margin. Net margin is after all the bills are paid and everything else, how much do they have profit-wise? And as you see, Tesla 6.38% and Ford's at 3.19%. Then PE ratio. PE ratio is the price to earnings. What that means is how much money do I have to spend for every dollar of earnings? In the case of Tesla, I have to pay $138 for every dollar of earnings Tesla provides. With Ford, you only have to pay $6.70 for every dollar of earnings that the company has. Revenue. Tesla brings in $72.5 billion in revenue. Ford brings in $184 billion in revenue. If you look at the margins, Tesla's net income is $7 billion. Ford's net income is $5.88 billion. Tesla's stock price right now is Tesla stock price right now is $250 a share, while Ford stock price is $9.77 a share. For me as a contrarian investor, I'm looking at where I can get the most bang for my buck. Where can I get the most income while I wait? I'm looking for stocks that are out of favor. I'm looking for sectors or industries that are out of favor. Especially with the tariffs coming on in the next week or so, the automobile industry should be out of favor, especially if Trump holds the line and keep the tariffs on. I'm thinking is this will be going on for a while. I'm looking for things that's out of favor. I'm looking for stocks that's depressed or came way off their high, especially with the market downturn. Like Tesla itself is down about 40% year to date from the highs. Ford itself is down about 50% from its highs. Now it's where do I put my money? You notice that the stock price itself was closer to the end of my investigation into these companies. because the stock price don't matter. A stock could be $1,000 a share, it could be $10 a share, it could be $80 a share. I'm not looking at the stock price. What I'm looking at is the things like the PE ratio. How much of my money do I have to spend to get $1 profit of their money? I know Tesla's PE ratio is way higher because it's considered a tech company also, and they got a lot of different things going on. But you want PE ratios that's, if you're a value investor, you want PE ratios 18 and below. You want to pay $18 for $1 of earning. You don't want to pay 150, 137. With Ford, it's $6.70. With Tesla, it's 138. Just me being a contrarian value investor, those are things I look for. Now, one other call out that I got to point out, I'm actually invested in both of these companies, but I'm invested in different portfolios of what I'm trying to do. When it comes to the value side, the stock that's best for me is Ford because it's going to pay me to wait. The dividend yield is higher than the savings account. The stock price has came down drastically. For the past 18 months, it's down 40%, the same as Tesla. Another thing that caused me to these two stocks in general is because during the great financial crisis, it was only two automobile companies in the U.S. that didn't file for bankruptcy and ask for a government bailout. Number one was Tesla. Number two was Ford. Another reason why I like both of these companies is because majority of their manufacturing is in the United States. I don't know how long this tariff thing is going to go on, but I want to make sure that if it goes on for a prolonged time, I want the companies that's least affected by the tariffs, that's going to be less input cost for them so they can produce. I don't need more profit margin squeezing, especially in the automobile industry where the average profit margin is somewhere between 2 and 8%. So I don't need no more margin compression there. So what I try to do is I accumulate as many shares as possible because one, for the dividend, and then it'll allow you to make more money when it moves up. With the dividends, if you reinvest them, it's helping you put more money and buying more shares of the stock. You can reinvest the dividends until you get to the golden years of your life. It will give you more money at the end of your working years so you can be more comfortable as far as retirement, more comfortable as far as having your financial situation in order. Now, where Tesla will be at, let's just be honest here. Before Donald Trump was elected, most of the people that bought Teslas was people that wanted to be cool, but people that was environmentalists. But the environmentalists was on the left side of the aisle. Then Trump got elected and Elon Musk jumped to the right side of the aisle. A lot of those people are leaving the brand Tesla. I'm not saying that Elon Musk can't recover. I'm saying those are other nuances that I have to factor in if I'm debating between these two stocks. So that's why I have Ford currently in my value investment portfolio and I'm accumulating shares there. Tesla is in my innovation side of the portfolio, or the high flyer, high PE side of the portfolio. And I am not investing in another single share of Tesla. I'm just letting see how this whole thing plays out. I hope this helped you. Please like, subscribe, share, and thank you for coming into the process.